Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape is experiencing dynamic shifts as Bitcoin approaches unprecedented price levels, signaling a resurgence of bullish sentiment across digital asset markets. This upward momentum appears partly fueled by intensified institutional interest in the United States, where data reveals Bitcoin trading at a notable premium on Coinbase compared to offshore exchanges, a divergence that historically indicates strong stateside demand. Such sustained buying pressure from American investors could potentially accelerate Bitcoin's price discovery phase, especially as the asset tests key psychological thresholds. This institutional enthusiasm may also validate Bitcoin's evolving role as a macroeconomic hedge, particularly amid global trade tensions and currency fluctuations. Though market participants should remain cognizant of the inherent volatility that accompanies rapid price appreciation. Concurrently, Ethereum has demonstrated remarkable resilience by reclaiming the $2,700 threshold after nearly a month below it, a recovery largely attributed to substantial inflows into US-listed spot exchange-traded funds that have now surpassed $4.5 billion in cumulative net inflows. The juxtaposition of robust spot demand against a rare net short bias in derivatives markets, where Binance's perpetual long-to-short ratio recently dipped below parity for the first time in over 2 years, creates a tension that could amplify price movements in either direction. Should upcoming catalysts like staking enablement in US ETFs materialize, Ethereum might experience enhanced utility as both a transactional medium and yield-generating asset, potentially strengthening its position against competing smart contract platforms. In the altcoin ecosystem, Polkadot's native token has emerged as a standout performer with gains up to 5% amid broader market strength, establishing technical support levels that could provide stability during future volatility. This upward trajectory coincides with heightened activity across decentralized finance protocols, where tokens like Euler and Compound have posted double-digit gains following governance upgrades and institutional integrations. Such renewed interest in DeFi infrastructure might stimulate developer activity and protocol innovation, potentially leading to more sophisticated financial instruments on blockchain networks. The meme coin sector has rebounded vigorously from recent slumps, with multiple tokens surging over 30% as speculative capital rotates into higher-risk assets. Projects like Pudgy Penguins have particularly benefited from whale accumulation and regional demand surges, highlighting how niche narratives can rapidly capture market attention. This resurgence could expand liquidity across smaller market cap assets while testing the sustainability of purely community-driven valuation models, though investors should note the inherent fragility of tokens lacking fundamental utility. Regulatory developments are gaining prominence as U.S. lawmakers designate mid-July as Crypto Week, with 3 pivotal bills addressing stablecoin frameworks, digital asset market structure, and central bank digital currency restrictions scheduled for consideration. Legislative progress in these areas might establish clearer operational guidelines for blockchain enterprises, potentially reducing regulatory uncertainty that has historically impeded institutional adoption. Simultaneously, the SEC's Crypto Task Force has emphasized that tokenizing traditional securities doesn't alter their regulatory status, a clarification that could influence how institutions approach asset tokenization, while underscoring the need for compliance integration in blockchain-based financial products. Corporate treasury strategies continue evolving as European firm The Blockchain Group expands its Bitcoin reserves through a $12.5 million acquisition, reporting extraordinary year-to-date yield figures that highlight Bitcoin's potential as a corporate reserve asset. Such accumulation patterns might gradually reduce circulating supply while encouraging similar strategies among small to mid-sized enterprises, though the long-term viability of this approach depends on sustained market infrastructure development. Security innovations are advancing as Matrixport launches a tokenized gold reserve system, positioning XAUM as an on-chain hedge against macroeconomic volatility. This initiative could expand real-world asset tokenization frontiers by creating integrated ecosystems for trading, lending, and investing in tokenized commodities. Concurrently, Greece's successful seizure of cryptocurrency linked to the Bybit hack the country's first such recovery operation, demonstrates how blockchain analytics tools are enhancing law enforcement capabilities against cross-border crypto crimes, potentially increasing institutional confidence in asset security protocols. Market structure developments include NovaX's debut as a security-focused trading platform, emphasizing institutional-grade infrastructure, arriving when exchange security remains paramount following high-profile breaches. This launch could pressure existing platforms to elevate custodial safeguards and transparency measures, benefiting ecosystem security overall. Meanwhile, the derivatives market experienced significant dislocation as Bitcoin's price surge liquidated over $539 million in short positions within 24 hours. A reminder of how leveraged positions can exacerbate market movements during volatility events. Venture capital activity indicates resurgent confidence, with crypto fundraising reaching $10 billion in Q2, the strongest quarter since early 2022, suggesting reinvestment in blockchain infrastructure after a prolonged downturn. This capital deployment might accelerate development in neglected sectors like decentralized AI infrastructure and real-world asset tokenization, though the long-term impact depends on sustainable business model execution. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.